think of what's happening in Bitcoin. Here's a way to quantify it, to take yourself out of what's happening for people who don't know what's happening. Like holding Bitcoin, right? And it's just holding. I'm just going to hold it forever. Imagine being in Argentina and saying, I'm just going to hold US dollars. You would escape the crushing devaluation of that, and you would look better than all of your friends in El Salvador, in Argentina. And that would be one way to do it. But what if you instead asked, I'm going to, instead of just holding it, I'm going to create businesses in US dollars that are denominated, and I'm going to build balance sheets in US dollars. It would be an entirely different game that you'd be playing. Now realize that everyone in the world, everyone is living in Argentina if they're not in Bitcoin.
Something serious is happening, and most people don't even notice. It's not a sudden crash flashing on your screen, it's slower and more painful. Every year, your money quietly loses value. Your paycheck doesn't stretch as far, and your savings barely grow. No matter how hard you work, it feels like you're stuck in a never-ending cycle. Just look at Argentina, a country that has already lived through what the rest of the world is starting to experience. Their currency has collapsed repeatedly, inflation has wiped out purchasing power, and prices can double overnight while salaries stay frozen. People don't plan anymore, they just survive. Jeff Booth warns that this is no longer just Argentina's problem. His message is clear. If you're not in Bitcoin, you're living in Argentina. That's the truth many don't want you to see about Bitcoin in 2025. If you truly understood it, you'd never trust traditional money again. Dollars, euros, and yen are losing value every day, quietly leaking wealth from your wallet. Governments claim printing more money helps the economy, but Booth says it simply steals from savers. It's an invisible but devastating drain, like a slow leak in your financial foundation. We're trapped in a system designed to collapse, inflation never ends, debt grows, and people work harder just to stay afloat. That's why Booth is sounding the alarm. Without Bitcoin, the future looks like Argentina. Constant financial pressure, no real way to save, and no escape unless you break free from the old system. Now, let's dive deeper with more clips from Jeff Booth's interview to understand his insight. Cybercriminals are getting smarter, and everyday investors are the new target. You worked hard for your crypto. Don't lose it to a scam. Recently, attackers bribed offshore agents at major crypto platforms, stealing names, birth dates, even social security numbers. They drained real accounts in seconds. No blockchain hack, just human error. Once it's gone in crypto, it's gone. That's why ITrust Capital created the Premium Custody Account, the most secure way to protect your asset. It's a closed-loop system, meaning funds can only move between you and your account. Even if someone gained access, they can't steal your crypto. Backed by institutional-grade custody at no extra cost. Sleep easy knowing your investments are locked down. Click the link, use code DOSE7, and get a $100 funding bonus. Start protecting your future with ITrust Capital.
Nothing has changed in my hypothesis. Nothing has changed in the last, except for more people understanding it's right.
Yeah.
And not only understanding it's right, that they could choose to live in an extractive system and in crypto and try to make more money in that, and the consequences of that. Or they could choose to live in the first global free market that's ever existed, and win out of that. So you have an infinite game playing against a zero-sum game, right. And an infinite game is it's repricing it all, right? So if you think of what's happening in Bitcoin, here's a way to quantify it, to take yourself out of what's happening for people who don't know what's happening. Like holding Bitcoin, right? And it's just holding. I'm just going to hold it forever. Imagine being in Argentina and saying, I'm just going to hold US dollars, right? You would escape the crushing devaluation of that, and you would look better than all of your friends in El Salvador, in Argentina. And that would be one way to do it. But what if you instead asked, I'm going to, instead of just holding it, I'm going to create businesses in US dollars that are denominated, and I'm going to build balance sheets in US dollars. It would be an entirely different game that you'd be playing. Now realize that everyone in the world, everyone is living in Argentina if they're not in Bitcoin. Right. And we're building Bitcoin companies. Like, it doesn't even seem fair. It doesn't even these companies are growing profitable, and they're adding Bitcoin to the balance sheets each month. And they're doing that by providing value in the free market. And they're expanding this network to the point that other people are starting to see this, and major capital is starting to see this and wanting to be involved in us, with us, not just from we're going to make more money. Our time is aligned with where we want the world to go. So, and which is remarkable to see, but in helping form that thesis and pulling a whole bunch of people outside of this box that they were in and just being constant in it, I think a lot of people are starting to see themselves as they are the system. So I think in terms of Bitcoin. I have no fear of spending in Bitcoin and replacing, but I think, and so I do that every day. But I think in terms of Bitcoin, in other words, I'm contributing, I'm both a part of the map and the territory in the first global free market that's ever existed. And the 45% risk-free rate that I'm referring to is actually relative to the other system. It's actually higher than that because the deflation in this system, right, in the first global free market, is accelerating. And so, and I've used this house as an example before, but I keep on forgetting to update the numbers, right? So this house that I'm sitting in was 300 Bitcoin 5 years ago. And now it's 11 Bitcoin, right? And it's just falling. Energy prices are following the same thing. So when I think about the risk-free rate, or when I think about that just holding Bitcoin, now the only way to beat that rate, that's why I said just holding it in Argentina, US dollars, and that would be one way, right, to escape that devaluation rate. But that's pegged against the devaluation rate, right? If you're building businesses on top of that are actually turning into Bitcoin, essentially Bitcoin engines of growth, your balance sheets are building in Bitcoin, and so that's our bar for investment. That's my bar for investing. I would never make an investment where I didn't think that we could outpace the just holding Bitcoin. Just like if you thought the risk-free rate of capital was 5% of the bond rate, it's not. But if you thought it was that, you would take more risk to try to you might go into distressed debt at 12%. Because you were trading up. Right. You might go into equity at 20% risk. Now, it just changes the calculation, and I believe the risk-free rate is at minimum 45%. And so you're looking at companies that can grow their Bitcoin treasury, and by providing value to by creating value to others. The only way you get paid in the free market more than anybody else is by creating more value for them. I suspect that in time, there'll be specialists of venture capital in tiny little that are better in certain different things. Right now, it's so early in this that it's a wide net, and you're seeing things. And when I say wide net, it's a global fund. So you're seeing different things in different markets globally, and we get to see some incredible founders and incredible companies all over the world. And so it's been wild. And I find it fascinating that so many people talk about all the problems with Bitcoin, or the problems in understanding it, or the problems, because what entrepreneurs do is go fix those problems, get paid for it, right? And so you have a whole bunch of people in the other system worried about Bitcoin when you have other people racing out of that system to solve problems and getting paid for it. So and just because the way the world works today, there's almost an infinite amount of problems from that existing system. And people moving their time into solving Bitcoin scalability, privacy, different things in layers on top of Bitcoin, obviously create staggering opportunities to provide an off-ramp for all of these people that are going to be stuck. But that off-ramp is what you're doing. It's what Natalie Brunell's doing. It's what Sam Callan is doing. It's what all of these people are doing. They're finding their niche where they're the best, right, where they can really add value. And if I watch some of what's happened with my friends through this, right, and what's happened to their lives, it's just the same thing over and over and over again. They've moved to provide more value. As they provide more value, the market responds, and they're exploding.
What do you think is the biggest problem that needs to be solved with Bitcoin right now?
I don't think there is one. I really I think there's beliefs of them, rather than then there's lots of opportunity to build businesses on top of this protocol that create opportunities. But I think foundationally problems, and I think we already have enough of the protocol stack.
For Jeff Booth, the solution is clear: Bitcoin. He explains that Bitcoin changes everything because it has a fixed supply. Only 21 million Bitcoins will ever exist. That means no one can print more, not governments, not banks, no one. Because of this scarcity, Bitcoin holds its value. It doesn't inflate or lose purchasing power like traditional currencies do. This stands in stark contrast to what countries like Argentina are experiencing, where their currency keeps losing value while Bitcoin's worth remains strong over time. Booth runs Ego Death Capital, a Bitcoin-only investment fund. He doesn't just believe in holding Bitcoin, he's building real businesses around it. His fund invests exclusively in companies that operate directly with Bitcoin. He even calls Bitcoin the risk-free rate of the crypto world, meaning that if a business or investment can't outperform simply holding Bitcoin, it's not worth pursuing. According to Booth, Bitcoin outperforms traditional assets by roughly 45% annually, because while most currencies lose value, Bitcoin steadily gains. Booth also highlights how using Bitcoin can give businesses a competitive edge. In a place like Argentina, for example, a company earning in US dollars would grow faster than those earning in pesos. Bitcoin offers companies the chance to earn and save in strong money while others struggle with inflation and devaluation. To Booth, Bitcoin is more than an asset, it's the foundation of a stronger, fairer economic system that's already being built. Let's watch more clips from his interview for deeper insight.
It is a wild ride to be, but that's I think about even my process going through Bitcoin and understanding and writing the book to examine this for myself too. And I think once you unveil, something that's true and people start to know it's true, now you can see a solution set that's very different. And I think what you just described, how each of us is a node in this network and is getting stronger and stronger, and all of those people are just activating and moving this faster and faster. That's what I can't believe I get to be a part of. I can't believe I pinch myself every day that we get to do this together. We had a thesis, and you know this, and many Bitcoiners know this, that I've always thought that this isn't a technology where a technology is winner take most. This is a protocol which is winner take all, and protocols come in layers. And so we had the thesis that it was early with Lightning, with where Lightning was at the time where we started the fund. First, I wanted to move my time into all Bitcoin. So it was almost a selfish thing to be, because there was a disconnect with what I said I wanted into the world and me funding that world, trying to extract money from. So that was being part of the problem. And so I wanted to move my time all into Bitcoin. One of my things, because honestly, I've made so many of my own mistakes in building businesses, and so many that I thought that would be a really great place to play to help other people create their value and their value to Bitcoin on Bitcoin and create value there. So I thought a venture fund would be a great way to do that and move my time to it. At the time, with early where Lightning was and Liquid and all of the scaling solutions, you could see it was emerging, but it was early. So we knew at that time, and you'd never if we raised a huge fund at that time, there wasn't enough to work on in that time. You actually had to seed those companies. You had to help them, and you had to understand that the path that would look like, and really work with those companies and founders, because it was going to be a long path. So we raised the right amount of capital so that we could deploy that strategy. That strategy has been crazy effective. And a lot of those companies are not just growing really fast, they're providing enabling solutions and everything else to build more and more, and more on. And you're seeing an explosion, by the way, and it's not just us. A lot of the other Bitcoin only VCs help, not just Bitcoin only VCs, a lot of the, non-dilutive capital and grants in the system, but all of that capital kind of having a different view of what the world would look like. than crypto and all the nonsense and trying to just make more money, trying to provide value. What I was describing in Price of Tomorrow and why I dedicated 2 chapters to artificial intelligence is I knew it was moving exponentially, but most people were measuring it linearly. And that's why I use the paper folding example. 50 folds of a piece of paper, it reaches the sun. And most people are measuring it linearly. So they don't realize that in fold 36, 37, when you start taking the bigger steps, which is exactly what was happening in AI, that they were waking up and saying they couldn't see where it would be when I said it would be there because they had the wrong measuring. And so remember that right now when you're looking at AI, which is actually growing far faster than Moore's Law, right? It's doubling every about 6 months right now but that means the AI you're using right now is the worst it'll ever be by far, right? By such a staggering amount. And that AI, and so exactly that point is that system should make mass deflation and you get richer every year by doing nothing. Mm-hmm. The existing system has to extract all of that and more at an exponential scale. It's just a mirror image, right? Because these systems are incompatible together. So I think people get so confused with AI in that it's a productivity tool, right? And that productivity leads to growth. Faster productivity is faster deflation. They're thinking of growth through a lens of growth that the only growth comes from more manipulation of money, which is more centralization. Right. They're not thinking of true growth in a free market, which is prices fall to the marginal cost of production and that all of that productivity flows to you. What I'm describing in Bitcoin is it's measuring that perfectly because it can't be cheated. You have an energy backed protocol that's decentralized and secure that's perfectly measuring the free market. This is an interesting thing in the conversation that for me, I find such a hard time because I can't believe people can't wrap their heads around it. We're both parts of the market. In a free market, we have to create more value. Of course, we're going to use AI because if we don't, we can't create more value. And then on the other side of us as creators, we're users of that value and we only choose things that give us more value. By the way, what I just described is entirely the entire sum total of economics. You could explain it to a 5-year-old, right? We trade with each other to create more value.
Right.
We compete with what was there before. And the only way we could provide more value is offer more value than what was there before. And we use the more value. Yeah. Prices fall as a result. What does that mean? It means you've never lived in that system. It means you have no reference point of this. When you talk about capitalism, you're not actually talking about this. You're talking about a control mechanism, right? When all of the PhDs and all of the economists and all of the nonsense that is supposed to explain something so simple to make it so you can't understand it, right? And winners write the history books and we reset currencies through war over and over and we do the same thing again. We've always lived in that other system. So it would be normal to try to append Bitcoin onto that other system to try to explain it. If you just say, what would it look like? What would the first global free market look like if Bitcoin stayed decentralized and secure, protocol bounded by energy? It would describe exactly what we're describing. Economics would be super simple.
Right.
The only way you could get more than somebody else is providing more value to people.
Bitcoin took a sharp 5% drop over the weekend, falling from $100,330 to about $100,300, kicking off August, historically one of its worst months. But this dip could be more than just a routine pullback. It might be a critical turning point in Bitcoin's ongoing bull run. IG Markets analyst Tony Sycamore says Bitcoin must hold the $110,000 support level to have a shot at retesting its all-time high. That level is key because $112,000 was the previous peak and a logical fallback target. Bitcoin briefly climbed back to $114,800, but its next moves depend on how risk appetite weathers recent U.S. economic shocks, like a poor jobs report and looming tariff tensions. Even if Bitcoin stays above $110,000, it faces major resistance near $125,000, with no clear catalyst expected to push through soon. If that support fails, a harsh correction could drag prices down to the 200-day moving average around $99,355, risking the loss of bullish momentum. Crypto veteran Arthur Hayes echoes this caution, warning macroeconomic headwinds could push Bitcoin back to $100,000 or below. Historically, August is a tough month for Bitcoin, averaging an 11.4% loss since 2013. Recent Augusts saw steep declines, including drops to $27,300 in 2023 and $19,800 in 2022, with a potential fall to $15,000 this month if history repeats. September hasn't been much kinder, with 8 of the last 12 years ending in losses. Still, hope remains. August 2021 saw a 13.8% gain, and if the 2025 market cycle holds, this August could defy the odds. Ultimately, Bitcoin is balancing on a razor's edge. Staying above $110,000 keeps the bull case alive, but falling below could signal a tough road ahead. This isn't just technical analysis, it's the most intense battle between bullish optimism and bearish reality all year. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.